Hey everybody, it's day 5656 of the $1,000 account challenge, and today we're up $683 or 6% in the account. Just by chance, it rounds it out to an even $12,000. We started with $1,000 55 days ago, and have been running it up ever since, just simply day trading options and using my strategies based off of the watch list stocks that I pick along with those watch list trigger levels. So today I wanted to do a review video of the trades that I took. Of course, I always post up my emotional review and the write-up of the trades along with the charts and the entries and the exits and all of the alerts. But in case you didn't want to read that, here is a video review. So we're going to start off on the day trade watch list to begin. Tesla was a short idea below $178. Remember, on the daily time frame, Tesla's been falling ever since rejecting that 200 EMA, fell below the 50 EMA last week, had a green day to rally up, and I was looking at this as a potential continuation short today, given the pre-market gap down. Now, gap down days, the ideal scenario to look for is an opening rally that gets sold to bring this back down. We didn't get that ideal scenario today. Tesla opened up and just dropped completely. So remember, 178 was our short level based off of the watch list, right? Given this strong sell on Tesla at the open, my thought process was this. On a rally back up to 178, it's probably not going to be enough of a rally to have this be a true rejection. The bigger the drop, the larger the rally back up is going to be. And the same is true for the rallies. The larger the rally, sometimes the bigger the drop or the bigger the pullback will be before it continues back in the direction it was heading in the first place. So the opening drop is good for confirmation purposes, but it's tough to get in on a trade like this when it drops so much. So let's note what the true pre-market low is. That's going to be $179. Remember that on a stock that is trending down, each previous support should become new resistance. And I'll give you that example here in the pre-market session. So if we're looking at 184 as our support point, on any rally, Tesla should not reclaim 184. So then 184.5 kind of becomes, or 183.5 becomes our support. On any rally, this should not reclaim 183.5. So now our new support is right here, just below 182.5. On any rally, 182.5 should not be reclaimed, right? New support right here at 181. So on any rally, 181 should not be reclaimed. And that's telling you it's just in a downtrend. It's just continuously making lower lows as well as lower highs. So continuing with that trend, our support in the pre-market just before the market open, $179. So on any sort of rally, it should not reclaim 179 if it's to continue down. Now, let's flip this to the 1 minute time frame. I had a short at 178. We get the drop down below 178, falls all the way to 176, and then we get the rally back up to 178, pretty close to it, right? This is worth it for me to go ahead and take this entry here as a short position, just based off of the watch list, based off the analysis that I did. It's worth it to go ahead and take that, even though we know that it could potentially rally up to 179. Maybe there's a chance that Tesla doesn't get that far. Maybe there's a chance Tesla actually curls over from here and continues down. So I want to get some skin in the game. Take an early entry here, leave myself enough room to be able to scale into this position if it continues up. Sure enough, it does continue up. Add to the position up here at 179 because that is the pre-market low. That now becomes our stop loss. Remember, we want to see each previous support act as a new point of resistance. It should not reclaim 179. It never does reclaim 179. We get the lower cost basis average in here and then wound up closing the position down here for about a 10% gain. Now, why did I decide to close for 10% and not look for the low of day? Oh, because it's pretty close to the low of day already. It had an opening sell that was fairly aggressive. It had a pre-market sell that was pretty aggressive. I'm just thinking at this point, and on the daily time frame, Tesla's been falling already. I'm thinking at this point, maybe the extension down this much is a little too much too soon. So to take profits at 10%, I am fine with that. That is that trade. Second trade that I took was on SPY, long. So let's go back to the day trade watch list. SPY, long idea above 409.50, short idea below 406. 406 is right here, so we have ourselves a trend line drawn. So we're same deal on SPY, really. We got the trend line drawn at 406 because it's going to be below the pre-market lows. We were just basically looking for those lower lows. Opening drop down to 406, that rallies up and rejects the high of day. Then we get another drop down to 406, and it starts to rally back up. And around this time is 10 a.m. And sometimes at 10 a.m., you get a kind of make or break directional move in the market. It's either going to be a sell-off or a rally. It doesn't always happen. Today we didn't get too much of that, but sometimes, there is news drops. There are news drops at 10 a.m. So what I noticed was this is a pretty strong sell candle, right? But then we get 1, 2, 3, 4 candles holding 406 as a point of support before this starts to rally back up higher. And that's interesting because this is validating watch list rule number 3. All right, if you're in the Discord server, you should know what these watch list rules are. That is validating watch list rule 3. The short triggers being held as a point of support, we can look to potentially take this long. Then we combine that with the fact that this downtrend trend line connecting the peak, the high of day, basically, to each rally on the way down is being broken. That's signaling a potential trend change. So I go long, market buy long on the break of this trend line after validating the low of day or short trigger as point of support. Go long here for the move up into the high of day. Wind up closing the majority of the position here at 15%. I was up almost 20% there. I was looking for a 20% sell. We didn't quite get it, and I set like a 4 or 5% stop loss on the remainder of the position. So as this came back down, I did wind up closing it here, the remainder for profits before it got back down to break even. So something to note, if you're ever up 10, 15, 20% on a position and you're holding runner size, absolutely no reason why that should be a losing trade from there. Could I have held through and been more profitable and got my 20% later on? Yeah, absolutely. It continued to rally. But was it worth it? Nah, I don't know. I think that at this time, the smartest decision there to make is to just close it if it's getting anywhere near break even, because you can always just re-enter later if you would like to. Now, I never did. I called it a day after this, but that was just the decision that I wound up making. So 2 pretty solid trades following the trading plan straight off of the day trade watch list, following the trigger levels, following the watch list trading rules, bringing our total portfolio balance to $12,000. I hope that the videos helped you out and maybe gives you a little bit of more insight as to why I took the trades where I did and what I was looking for. It's not rocket science. I'm just applying the techniques and strategies that I teach within the Discord server. If you're not a member of the Discord, click that link in the description. Come join us. Come trade with us. We trade live Tuesdays and Thursdays. I will be live tomorrow, which is Tuesday. Thank you for your time. I hope the video has helped. Press the like button for me if it has. Subscribe to the YouTube if you haven't done so already. And I will see you in chat. Take care.